Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Friday, February 9th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. Start with the big picture, work our way into the day itself. Just a reminder that about 7 weeks ago or so, we tested this channel top at 258.13. It was a target, had been for a number of weeks, and we'd mentioned when testing it that it could contain monthly, possibly quarterly buying pressures, and that following a test of the 258.13 formation, you should allow for bearish retracement, bearish rotation back to the channel bottom. We called that a 3 to 5 month possibility. It happened inside of 2 months. 173.28, that formation was tested. Well, the area was tested. 177 and a quarter certainly was tested. I think the weekly low was 177.01, and that is inside the 1% zone of 173.28. We also have the daily chart, came very close to testing it as well, as you can see, 173.21 today. So that is what has played out. And now that we've tested channel support, we are saying just the opposite, that you should allow for 173.28 as able to contain monthly, possibly quarterly selling pressures, and above which the 258.13 channel top is in reach over the next 3 to 5 months. Is it clearly expected? Is it clearly indicated? Not just yet. But what is expected as a 3 to 5 month upside objective is the 214 even descending 1/3 speed line that is based in part on the recent low from 4 or 5 days ago. And so it is dropping daily. It is trend defining in its own right, and we're calling it a 3 to 5 week objective, holding above 173.21, 173.28. It's kind of pick your spot between 177 and a quarter and 173.21. That is a base of long-term support. On the way up, we've been mentioning how the channel top at 190.58 could be considered a 3 to 5 day objective. We tagged that on Thursday. Can contain session strength. And there is the possibility, as we've been saying, and we do like to address the 3 to 5 day swing trade dynamic. Those of you who trade that holding below 190.58 will keep the 173.21 formation in reach by the end of next week, over the next 3 to 5 days. Now, we did just come off of long-term support, and we are expecting 214 even as a 3 to 5 week target. So be careful. Don't stay short aggressively. Hold that short position over the weekend. For instance, if we close above 190.58, I do think on an intraday basis, if we push through 190.58, we should test 195.40. And once again, if we close today above 190.58, I give it about 2 weeks before reaching our 3 to 5 week objective at 214 even. We're about a week into it now, about 4 days. We came off of this low. That was Monday of this week. We actually tested it. And Thursday, we tested the 3 to 5 day channel top, the short-term channel top. And once again, if we close today above 190.58, that would be a buy signal on strength. Following a testing of long-term support, that's a pretty good go with buy signal to the upside. So closing above 190.58, if you've done nothing yet, you're itching to go long, I think that's a pretty good signal up to 214 even before this market likely runs into trouble as we move through the rest of February and into March. We could fall away from 214 back into the low 170s again within 3 to 5 weeks. as I've been saying, there's a scenario where we could fill out this wedge between 173.21 and 214 even, both dropping daily for the next couple of months. It would be, though, a settlement over the next few weeks above 214 even that would clarify a buy signal, whereby I would anticipate within probably another 3 to 5 weeks this 258.13 long-term channel top, which I've mentioned is considered attainable, is in reach, is not expected necessarily. That becomes expected once we close above 214 even. I hope that makes sense. Let's go back to, the day itself. That holding below 190.58 will keep 173.21 in reach by the end of next week, and that is clear. On the way down today, we have minor points, the most notable of which, and I don't know if we'll see it today, is 181.06. That is the low settlement price that was actually put out on Monday. So we've got these carefully chosen minor points, 185.27, 83.31, all of which are suited for aggressive day traders. But really, in terms of the trade of the day, it's being short below 190.58, holding out for perhaps 181.06. And that's the day trade. If you're a 3 to 5 day swing trader and you're short, you're holding out once again for the 173.21 to 177.25 region. Inversely, if we close above 190.58, that sets up for 214 even within a couple of weeks. Now, of course, there are options trades that can be made that we mention quite frequently as we're slipping into the low 170s. And this was said over the last week, 2 or 3, and certainly was an actionable element early in the week when we were testing it. You could consider reaching for 245, 250, 255 strike out of the money calls that don't expire for at least 6 months. This is like a 3 to 5 month move. It could also be much quicker. Also, in the same vein, as we're testing the low to mid to upper 170s, you might also reach for 205, 210, 215 strike out of the money calls that don't expire. I would go 2 to 3 months out on that. That's a 3 to 5 week play. You always want to go twice the distance, in my opinion, relative to the projected time it will take to reach it. And I think 3 to 5 weeks is realistic. And in fact, if we close today above 190.58 and you're a short-term options trader, you could reach for 210 strike out of the money calls that don't expire for at least, I would go 3 weeks out on that 1 to 2 week play. I think that's a pretty good play. You could also go at the money. Obviously the closer you are to expiration, the cheaper they become. And so, if you've got a strike that expires, say, in 2 or 3 weeks, and we close above 190.58, I don't have any problem buying 192 or 195 strikes. They'll be in the money quickly, presumably. So there you have it. I don't go into all these details because we're not an options advisory firm, but we do have a lot of experience in options advice, especially in the commodities side over the last 30 years. And so I'm able to articulate just sort of the basic, what you may consider. I don't know. Let me cover one more thing, and I don't think this is going to happen today, and I don't think you think it's going to happen today either. But if all what breaks loose and we fall into the low 170s and we close today below that 173.28 formation, it should be by a 1% margin for technical clarity. So if we settle today, surprise, surprise, at 171.54 or lower, all of that reaching for those out of the money calls and going long, forget about it. Liquidate everything and go short. That could mean, for instance, reaching for 102 strike out of the money puts that don't expire. I would go 6 months out on that expiration because I think it could take the better part of 3 months to play out. Could be much quicker, but I think you should allow for 2 or 3 months for that to realize. And it would be indicated, it would be expected if we settle today at 171.54 or lower. I think that really much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. We put out a couple of stock picks this week. Alibaba on Tuesday. Las Vegas Sands Resort, LVS, I think is the symbol. We put that out on Thursday, both of which are right on the edge of meaningful signals. We're always looking for 20% moves, some of which can occur very quickly. So check out wickedstocks.com. You'll get 5 days free. And if you don't like what you see, you can take a peek. If you don't like it, you can bow out at no cost to you whatsoever. I'll be back Sunday afternoon with Monday's Tesla report, and you have a great weekend.